Hope everyone is doing great today. So today is July 7th at about 10:30 Central Time here where I am at, just for reference for everybody. You can have a look at the heat map for today so far. Lots of green. It's been a pretty good day. Consumer defensive, I believe, is the only sector in the red today that was as of about 30 minutes ago or so. You can see here energy is the big outperformer today for sure. We'll touch on it a little as always. You can see the S&P is up 1.13 today. It's had a sitting at 38,3888. Bit of a nice number there. We're still well below the highs here. We've had quite a bit of a rally off the bottom, somewhat anyways. If we pull back a little bit of a month here, you can see that was our bottom. Then we'll have a look at some news here today. So GameStop announced a 4-for-1 split. So effectively, if they were executing it right now, 4-for-1 split would be 128 divided by 4, or whatever the current price is. I believe in July, sometime they will be executing the stock price. The board approved it. They had previously announced it, but now it'll be make it even more retail trader friendly. For those who don't know, it's like GameStop is like literally a meme stock. It's actually like kind of made a hedge fund crash because they had shorts on GameStop. So the stock, they were wanting the stock to go down, but the Reddit, the Wall Street Bets community, literally made this thing go absolutely insane, as you can see here. Definitely an interesting chart. And it's held up. It's funny to think, but it's held up. So anyways, we'll have a look at, I haven't showed this yet, but this is the Russian invasion of Ukraine. It's obviously very, very awful. I hate Putin and what he's doing. He's, whatever. I won't comment on it too much, but just to kind of get a little bit of a view of where things are at. I really like these guys. If you guys want to check them out, they offer like super in detail. It's very interesting. I won't spend too much time on it because it's probably a lot to read and stuff, and they go very much in detail, but you can at least get a little bit of it. I won't show the images, but I was going to say you can get a little bit of a view of things and whatnot. And little pictures here, they offer a little bit of a, yeah. They won't show the pictures, whatever. We'll go look at China COVID cases here. Obviously, they're still pretty low, very low. We want to look at the past maybe 2 weeks here or so. Had a little bit of an uptick. I think there was some mass testing in Shanghai or something like that. Yeah. So you can see here just a little bit of a news offers a bit of a nice little view of what's going on in China and stuff. It's obviously very important, feeds into inflation a lot and just everything. A lot of companies are definitely affected by the China lockdowns. Moving on to energy here. So today's been an awesome day. I love it today. We're up 13% on CPJ and CPG. If you're wondering why, you can see here we raised the quarterly dividend. We basically said that we're going to be buying back more shares now, and they released production numbers and they sold some assets. So they achieved their debt target number reduction in advance. So that's why we got more buybacks announced, and a dividend increase by 20-some%. It's definitely super nice. Love to see it. We're up 14% on the day, rightfully so. Great news. You can see here kind of what's going on and stuff. And more buybacks are coming. They don't say it directly, but they do say it directly in here. But more buybacks are coming, which is yay for sure. Obviously, you gotta love buybacks. Look at Obsidian. It's no news on it today, but it's up 6%. These are both NYSE listed, so you can have a look at them. They're up in Canada, but they're NYSE listed. So you can see here just the super low PE. And these guys, we're waiting on a return of capital to shareholders framework. We are kind of waiting on that because they're effectively waiting to refile. As you can see here, they announced this extension to their credit facility, and it says, you can see here, July 15th, we're the 7th today, so we're waiting on that, and we'll hear likely a capital plan from them. And if not, it'll be earnings time, which is at the end of the month, so we don't gotta wait that long at all. I really like these guys because they've been drilling. It's a bit of a different play. A lot of companies are very much focused on return of capital to shareholders, and rightfully so. I have all my other companies are kind of, they have a dividend or a buyback going. All of them do, except this guy so far. But they started drilling way back in October of 2021. And they've been kind of just drilling a lot ever since. They recently announced that they're going to be drilling some more. So we'll have a lot of, wells coming into production. And I believe strongly that the price of oil at the end of 2022, 2023 is going to be at, well, 2020 and in 2022, I'm going for $100, $90. We're going to be at, and then 2023, much around the same. It's obviously super dependent on the recession and stuff, but my point is that the price of oil will be super high both at the end of the year and 2023, and they're going to have all these drills that they take a while to increase production. So you can't just be full production all at once as soon as you get them in. So it's going to take a minute or two, but we'll have those hopefully, near full capacity, call it, by the end of 2022 and 23. Obviously, we won't be at full capacity, but either way, we're going to have a huge increase in production. And that's going to pay off a lot at $100, oil. And they got a lot of those rigs like at cheaper prices before inflation hit. They got a lot of those rigs in, like just, bought, not in the ground and stuff. But anyways, looking again here, we can see the price of oil has had a beautiful rise today. Rightfully so. Even natural gas is actually above $6. It was trading around 5 for a long time. We're up a lot on it, which is good to see. Well, for energy investors, obviously. And then you can see here the US slapping oil sanctions on Iran, which is, very, very interesting. The White House is deciding to do that. Obviously, I understand that and stuff, but, it's it's interesting. You kind of get a look here at all the news and stuff going on. I really like this site. We're obviously just super oil focused. They have really good stories and stuff. I like it a lot. So we'll look at spot gold. It's fallen off. It's not fallen off a cliff, but it was at like 2000 about almost during the war, I believe. It was holding about 800 even before the war, and now it's come down to 1740, even though inflation is very high. We have the war going on, lots of geopolitical stuff that should be driving the price of gold, but we have rising interest rates and a very high US dollar, which gold does not like whatsoever. So it's maybe explaining it some, but it's definitely had quite a fall off. It's been, if we can pull back here, maybe 6 months. Yeah, you can see here we hit 2000 briefly, and now we've kind of just fallen off a bit of a cliff here. I used to be super into gold, but now I've for a while now, I've kind of just been, I don't know, it's not, oil is the place to be. If you can't tell by the channel, I love oil a lot. So we'll look at commodities here. Wheat is up today. This obviously feeds into inflation a lot, and Ukraine is a huge part of this, and Russia as well. Putin is basically holding the world hostage, quite literally, with food and as well as gas and oil. So not a very nice man at all. But anyways, we'll look at soybeans. They're up today after, falling off quite a bit. Maybe the first, little uptrend in a minute here, if you want to call it that already, but still you can kind of see it's a bit of a tiny bit of a bounce off the bottoms, tiny bit. But anyways, yeah. And we'll just kind of refresh the heat map here, and we'll have one last look at that, and then the S&P. So yeah, tomorrow is a big economic data day, and then in the next, well, I think 2 weeks or so, we'll kick off kind of earnings season. That'll definitely be of note. The big thing is right now, it's just earnings estimates are still very high. There's always talk about them and if they're gonna come down. Guidance in this, like for this earnings season, guidance is gonna be laser focused on. You're gonna see a lot of movement based off of guidance. And rightfully so, because people are very much, looking forward at earnings and what they're gonna do. It's very uncertain times. Obviously, we've rallied a lot off the bottom somewhat, but it's still very uncertain. I think we're still gonna go a lot lower. I'm thinking maybe 34, 3,300. The thing I'm really worried about is that the Fed is gonna break something, and that's my big worry, is that the Fed is literally just gonna raise interest rates so much that they're gonna make us go into a recession for sure. But my worry is that we're gonna have maybe a bit of stagflation here, that's gonna cause them to raise so much that they break something in the economy, and I have no idea what it's gonna be. I cannot tell you remotely at all what it's gonna be that's gonna break or what's gonna happen, but I just have a very bad feeling. That's all I'm gonna say. I've had a very bad feeling for a long time now. I've spoken about it a little bit, in some videos. If you guys want to check out the biggest Federal Reserve mistake in history, it's on the channel as well. But anyways, though, so hope everyone is doing great.